Did you have any moment when you were sitting with your partners and say, okay, it will never work?
It was sort of like constantly for 2 years that got us into trouble. We had a lot of competitors.
What else helped you to win this game?
So what we did wasn't a new idea, but it was a good execution of it. Many more startups fail because they don't reach the customers than not having a good product. We were very good about tracking clicks and seeing what's happening. But the clicks tell you what, but they don't tell you why. So you really have to talk to people why.
Nowadays, AI is disrupting every field. What are the fields of networking that will be disrupted by AI?
And I think actually one of the issues with AI we're going to have is that...
Welcome everyone! Today we have a very special guest, Konstantin Gurikya, co-founder of LinkedIn. Konstantin played a pivotal role in LinkedIn's go-to-market strategy from day one. In the first 5 years, they spent $0 on ads and still they reached millions of users. They beat 50 competitors, Google, Monster, all lost. What made the difference? In 2016, Microsoft acquired LinkedIn for $26 billion. So what actually worked to get the company off the ground? Why do startups fail, even with a great product? What does it take to get users to use something they don't yet believe in? And how do you build a network that opens any door? It's a conversation about how unicorn founders think, build, and win in Silicon Valley. Let's get started.
Hi, Konstantin. Thank you very much for joining us today. You are one of the co-founders of LinkedIn. Nowadays, LinkedIn is a global platform, but back to 2002, it was just a bold idea. And you were responsible for marketing, and go-to-market strategy. And that's actually one of the most challenging areas for every startup. Can you tell us, how did you get LinkedIn took off the ground? How were you able to get your first million users?
Also, one of the things that I look for in business opportunities is really how do you reach your customers? Because I think that many more startups fail because they don't reach the customers than not having a good product. Which is kind of a shame because that means there's products out there that are good products that people are just not utilizing, whether it's people or companies, B2C or B2B. So when I look for opportunities, I look for things, on the distribution side. How do you reach customers? And one of the real opportunities of the internet was to reach people kind of in a viral manner where they invite each other. And so, but you can't just ask any product and say, oh, tell your friends about this great t-shirt, because there's not a lot of benefit for them. You might want it, but the people who buy the t-shirts, why should I bother my friends? But in the case of LinkedIn, we designed it from the ground up as a product where the product gets better the more of your business contacts are on it. So there's a natural incentive to pass it on. And so that was really the core of the initial strategy.
Mm-hmm. And what was the original vision of the product?
Well, quite similar to what it is today, to be sort of a network that replicates your real-world contacts. These are trusted contacts. We put a lot of emphasis on trust. In fact, one of the alternate names we had was Trust Networks. We also were interested in Well-Connected as a name, but it was already taken, and we didn't want to spend more than $5,000 on the domain. So that's how we ended up with LinkedIn. But trust is at the core. So we really wanted people to connect with people they trust. So that's why every connection is not like a follow relationship, but it's one that has to be confirmed by both people. And initially you also had to have the email address because we figured if you know and trust somebody, you're going to have that email address. So it wasn't that you could just invite somebody that you don't know to be your contact on LinkedIn, your connection.
Yeah, but still, getting people subscribed to join something that had never existed before, that's the real challenge. And I heard a story that how did you divide this process of getting the first users, using the first features? Can you tell us more? Where did you learn this way, and what actually did you do back then?
Well, I think it's a combination for myself. Is the fundamentals of marketing are very important with brand and so forth and trust. But also, I have an engineering degree, a master's from Stanford. And so I think marketing, when I first started my career in marketing, it was very much sort of like you place an ad somewhere and you find out later if it worked and so forth. But it wasn't very quantitative. But when you have viral marketing, you can measure exactly who's sending out invitation, how many, what's the acceptance rate, and so forth. And so there's a lot of, you have to measure the right metrics, and then you have to, keep tuning it. But there's sort of a more quantitative aspect now to marketing than there used to be. But the fundamentals are still the same. You can't just go by the numbers. You need to really understand what's the motivation for someone to want to invite somebody. What's the motivation for someone to accept it? So those are the kind of the psychology that marketing always, good marketers were good at. And, I think I understand kind of the use case really well because I kind of have lived my life. I learned, all of us founders, we were 5 founders. We had all 10 years or more of business experience, mostly at startups. And so we just learned how important trust is and a referral. If you want to reach somebody to hire them or for their expertise, if you just reach them cold, you often don't get a good response. If you work at a big company at Microsoft or something like that, then you get a response because they trust the brand and they know. But with a startup, these referrals are very important.
Every startup hits moments when things almost fell apart. I'm wondering, what were the toughest moments for LinkedIn?
I would say the first couple of years were, I'm not sure there's like one tough moment because when you have viral marketing, it's more of a constant thing that happens or doesn't happen. It's not like you run one big campaign and realize it didn't work. But overall, we underestimated, how hard it would be because business people are often very busy. They have a meeting to attend to, so sending out an invitation about this thing that they really don't know, it hasn't given them some utility, it was quite a challenge. And I think that actually has been why LinkedIn has proven so, to live so long and successfully. Because when we started, the big social network was Friendster. And then 4 years later, it was MySpace and then Facebook. And probably if Facebook hadn't acquired, Instagram, it would also be on a declining path. But I think that part that made it hard for LinkedIn also gave it the longevity because now every other company not only has to convince business users to join the network that they're creating, but people already on LinkedIn, so the network effects are quite significant. And it's different in the social context because for young people, sometimes they're always looking for the next, fun and interesting thing. And once the parents are on it, it's time to leave a network often. And they're the ones who are often driving these new technologies and new ways of communicating.
Or did you have any moment when you were sitting with your partners and say, okay, it will never work?
I would say the main moment, so there was a constant series of moments like that because it was just not growing like we thought it would be. To us, it was very clear, like the value proposition, why wouldn't you, connect with your contacts because you can just be more efficient than you are able to do it without it. So we were surprised that people weren't doing the invitations as much as we thought it would be, or even using the product once we had a critical mass. But I would say so it was it was sort of like constantly for 2 years, feeling like we're underperforming our plan. And, we basically then, that got us into trouble because when you don't have the network set up, you can't start monetizing and VCs don't have infinite patience. We had Sequoia, who was a pretty patient VC firm, always looking for the big outcome. So that was helpful, but everybody loses their patience. I would say though, before we started, we had really concerns about, because at the time when we started, we're not in the world we're living in now. Everybody had their contacts in sort of this Rolodex, the business cards stapled and turning them around. And it was not something they would sort of be comfortable. It was a key asset of your professional career, sort of how many and what the quality of your contacts, the diversity of the contacts that you have. So to put that core asset and kind of make it sort of accessible to some of your own contacts. And, people I'm sure would worry about, does someone else that I don't know get access to these contacts? That was, a big worry. And then the second was, a resume was a private thing until we started LinkedIn. It was professionals didn't have any public profile. Some executives would have a little bio on their website, but most people didn't. So it was not clear at all if people would be willing to do that.
So you mentioned a few first years were pretty challenging, yes? But were there a moment when things went much better, much easier?
I know for a story that sounds so good, to have up and a down. For us, it was really just slower, and then, there was also not a big breakthrough. Now, I think when people perceive it, I'm always happy when I could, because I would talk to my own contacts, because I would do my market research, almost based on my professional network. Of course, we follow the data. We were very good about tracking clicks and seeing what's happening and what kind of users are using what kind of features and who's inviting and what prompts them to invite and all those things. We're very quantitative as a firm, and back then there wasn't a lot of good infrastructure, so we had to build a lot of it. But I also like the qualitative feedback, because the clicks tell you what, but they don't tell you why. So you really have to talk to people why. And, the first year at least, when I talked to my contacts, they sort of, I joined LinkedIn because you asked me to and I want to help you. But it's like, I don't have any use for it. And so what I would usually do is to try to entice them. The first approach was I was trying to tell them, what about this? What about this? What about this? But it didn't have any good results. So what I then did is I said, which is kind of more like sales, I asked them, what are your 3 biggest goals this quarter, for you in your job? What do you need to accomplish to move the company forward, to make your boss happy, to, get promoted? And they would tell me the 3 things. And I would then tell them, like, how does LinkedIn help you get? And almost always I could explain how the 3 things would be more achievable using LinkedIn. And when they tried it, it almost always worked. So I was always very happy, when they actually tried it, and they invariably, I heard very little that someone tried something and it didn't work.
But LinkedIn wasn't alone. There were competitors in Europe, Zing or
Yes, it started as OpenBC. There was a company called eCademy in the US. Before us, there was a company called Rise. That was the dominant business network when we started. The one that had sort of the most momentum and the most funding and patents was a company called Spoke. There was a Visible Path. There was a whole plethora of ones. And I have a slide sometimes when I give presentation that has 50 competitors that we had to deal with on the way. People are often not that aware, but Google started, a network that was both social and professional, very soon after we launched. Monster, which was the leading job site in the world, created a professional network. So we had a lot of competitors along the way. A lot of them with, good ideas and certain innovations, but in the end, the company was able to prevail. And I think part of it is the network effects. So I would say things got a lot easier after that second year, because we had the network effects going for us, which made it people were much more likely to want to join LinkedIn, because they knew there were a lot of people there. They knew the quality of people was good, and less likely to join anything else because they had to overcome the downside of that.
Mm-hmm, mm-hmm. So what else helped you to win this game, this market?
Well, I think there is, the core is really getting that membership base, but you also need to make sure it's not just the number of members, it's the quality of the members. Mm-hmm. Because we saw other sites getting, and even 5 or 6 years before us, there were companies, the first one that really pioneered this concept of inviting other members and creating a network out of it was called 6 Degrees, kind of after the 6 Degrees of Kevin Bacon, or the Milgram studies that show that people on average, sometimes people say maximum, but it's the average, connected by six people. It's 6 degrees of separation. And so a lot of these sites grew very quickly, but they really didn't have sort of a utility associated with it. And they didn't have sort of a good, a lot of the success in entrepreneurship is not the idea. So what we did wasn't a new idea, but it was a good execution of it. And for pretty much all the 50 competitors, I can tell you why they failed. So I can't tell you necessarily as well why we succeeded, but I think again, this is a little counter to what people often want to propagate in startup land. Mm. It's like, oh, you got this great inspiration and this wonderful thing. And I would almost say, yes, we did a lot of really good work to get the viral working for professionals, but we also avoided any of the big mistakes, like a big had to be very careful with our audience that the privacy and trust are protected. So we couldn't be as aggressive as Facebook, in terms of how we handled that. So I think we did that right. In the short term, it slowed us down a little bit, but in the medium and long term, it really paid off. And I think the brand continues to be quite strong today.
Mm-hmm. Very interesting. I watched one of the recent interviews of Reid Hoffman, and he mentioned that he was lucky to be born at Stanford Hospital. Yeah, because he was the part of this ecosystem.
Silicon Valley it's a network of a generative platform. Networks amplify productivity. Being born in Stanford gave me a set of different, kind of perspectives. One, technology is a lens into the future. Another one is, as an individual, you can go create a technology or a technology company that can be a lever that can move the world.
And network is everything. Network opens a lot of doors. You were born in Germany, then you moved to the US. You also were a Stanford student, so you were the part of the Stanford community. How did you leverage that network? How did it help LinkedIn to grow your network or Reid's network?
Yeah, Reid and I had very similar philosophies, which is why we're both interested in this idea. And I basically learned early on just from books, like how important it is to have this network for your career. Because often, to get things done in business, there's only so much you can do by yourself. So, you need to either get information from other people or you need to collaborate with other people to get something done, whether it's a business partner or an agency that you hire, a freelancer that helps you out, an employee, or investor. So it's all really about relationships. And, what I found, partly because of my personality, I'm more of an introvert, is that going to a lot of networking events, I just didn't really enjoy it. But I also found they weren't very effective because you are just, sort of very superficially getting to know people. It doesn't provide a foundation of trust that you can really make a meaningful introduction. There are some people that you meet at a networking event and they'll say, oh, I'll make introductions for you to this person, this person, this person. Guess what? Someone who makes so many introductions usually doesn't have a lot of credibility with the people because they're not making good introductions. And the people who they're sending them to, they are either not good quality or they, got a little burned because they feel an obligation to respond to this person, or they don't even respond to that person's introductions. So introductions are best done when, my personal criteria is that I think it's going to be a win-win. So that after I make the introduction, the two people meet, that both of them are later going to send me a little email saying, great, thank you for introducing me. This was really helpful for both of them. It can't be just a one-sided thing. So if I do it through email, I don't always just, someone says, can you introduce me? Even when I think the other person's going to appreciate it, I usually don't make the introduction. I first ask the other person, would you like to meet this person? Give them the information. And then when I know both have opted in, then I make the introduction and I provide a little context so they know how I know this person, how I know that person. And I'm always happy to provide information like that. So that takes some time, but it's worthwhile. It's a good investment. So I would have, a lot of people work in these companies in Silicon Valley. A lot of them don't succeed. I was in a couple startups that, were kind of promising for a while and didn't succeed. And then people often find a new job and then they hang out with the colleagues at the new company. I think one thing I did differently, I know Reid did the same thing, is he would stay in contact with the people, not with everybody, but with the people that he really knew and trusted. And the same for me, stay in touch with them, find ways to help those people, and those also willing to help me then. And so by the time 10 years, you have sort of a fairly large network that is not from networking events where you briefly met somebody. These are all people that you've worked with and you've kept that relationship going for 10 years. Kind of in the social sphere where you have certain friends that you communicate with in a regular way. You have, I'd say your good friends are people you've woken up in the morning with. It's sort of a good criteria for that because they really know you when you're just sleepy in your PJs and hungry or, all those things. So same thing, your real important contacts are the one that are, know you very well so that they know what kind of opportunities to send you, whether it's information or people or jobs, and that are willing to be there for you when you need help.
Yeah, I totally agree. I also started to receive a lot of introduction requests, but that I was like, okay, I know this part of people, yeah, but how can I introduce you if I don't know you? And so that was a pivotal moment when I was like, how can I get better? How can I get know better these people to be able to introduce them?
That's right.
So now I have 2 months online program for entrepreneurs. So we work together 2 months,
yeah.
and I know them better. I know better how well they execute, if they have the real motivation. And after 2 months, I'm like, okay, now I can introduce, and now I use my credibility to introduce you to other people. So it's very interesting because it was like that before in the past, and this is the same like nowadays. And the main question, what should international founders, when they just arrive to Silicon Valley, do to overcome this challenge? Yeah, with the network. What do you think?
Well, I think the sometimes, it is harder, right, when you're starting in a new place. For me, I had the advantage. I had studied here for 4 years, so that, I didn't know very many people here before I came to study. So in the beginning, like the first year at Stanford was a little difficult. But by the time, I did a master's, so it was 5 years, I had a number of good contacts and also professors. I also made sure that, for example, I built relationships with certain professors. A lot of people just, get the lecture and the class is over, they got their grade and they move on and it's part of the resume. For me, I really wanted to get to know the professors better. And in fact, some of the faculty helped me get my first job in a startup. So it's very important to look at all the different people in your life. Again, your colleagues from work are one, but sometimes it can be your neighbors, sometimes it can be family. And so when you arrive, you need to utilize whatever you have in order to get what you want. So just going to networking event is probably not going to help you very much. Sometimes you can be lucky, and if you enjoy it, by all means do it. But I wouldn't count on that being super effective because it takes a lot of time. But what you can know is if you come from Germany like I come, you can look at now you can use LinkedIn. Before I would ask my friends, hey, my German friends, hey, do you know anybody in Silicon Valley, and what are they doing? And if someone seemed like they were interesting to me, I would think about, can I offer something interesting to them? And once I figured out, when I've done the research, like why are they interesting to me, what can I offer to them, I can ask my contact for an introduction. And so that's, I did that before LinkedIn, just by talking to people, but it was very inefficient, which was the reason we wanted to, it's like, what if I could search all of, my 150 contacts and all of their 150 contacts. Now I have a lot of people to look through, and I don't need to sort of by accident find out that this person in Germany happens to know someone in Silicon Valley. And sometimes it's not a second degree. It can be third degree. I've had many successes with third degree as long as the strength of the connections is strong. So maybe someone in Germany knows someone in New York, and I get to know that person. And because they trust, my friend who, is the common connection, he'll introduce me to someone else, in California. So you just need to grow that network and travel along, trusted contacts, because I think trust is just, we have so much limited time and there's so much information out there. So when you think about, I talked about it earlier, what you really need is you need to collaborate with people in a number of different fashions, but information is really the key advantage. And what you find, people say, oh, well, why do I need a network for information? Because I have Google, or, I have, ChatGPT or something. Well, the best information that gives you a competitive advantage is in someone's head. It's not written down. Because if you have access to it, your competitors have access to it. If it's just on Google, if it's just on the web. So the proprietary information, the knowledge that people have in the head, that is the one that gives you a competitive advantage. So again, the information search problem at the highest value becomes a people problem. So one of the early adopters we had were hedge funds. And some of the hedge funds that I talked to, they asked me to give a personal presentation to them in the early stages. That required all the managers, the investment managers, to go to LinkedIn, because before they were researching to invest in Apple, like it's very hard to make money in the public markets when everybody has the same information. But they would dig down, to the suppliers of Apple and don't just talk to the executives, because they're trained to only give the information that's that the PR lets them do, but find people a little lower down, who are excited to, because you have a common connection, reach them, they're willing to share some information. And it could be just someone in the supply chain that is a very good predictor whether the next Apple product is is as successful as maybe they make it sound like on the earning call.
Yeah, so did Reeds or your network help you to raise funds at the beginning?
Oh, absolutely. That was mostly Reed's network. So Reed had a much stronger network among investors than I did. All the 5 founders, the way we started, we did not buy a single ad for the first, 5 years.
For the first 5 years?
Yeah, no paid advertising. So the marketing cost was very low. We had a PR agency that would help us. And
PR agency.
Yeah, PR agency. That's basically the only marketing expense we had.
Many founders think that PR is not necessary, especially at the beginning of the startups, but it worked for you, yep?
Well, so it depends maybe what the situation is, but I do think it's often important. Again, it's about trust. And so, in B2B, having well-known publications write about you, or again, PR, it can also be like developing your customer stories, having sort of your customer come forward and say why they think your solution has helped their business is very important for assuring others and being able to do that in the language that the customers understand. For us, it was particularly important because we're a network, so we grew by all of the founders, and we had another 6 members of the founding team, so we're 11 altogether. We call it Generation Zero, and they started. And then we track in our system what generation someone is. The people who are invited by those 11 people and joined are the Generation 1. And so we would track, the generations we go. But all the members today come from those 11 people. And there's some other people who signed up later without an invitation. So that was always possible. We didn't want, some people think, LinkedIn tried to make an exclusive club. No, we just said, it's still helpful for us to get other people to sign up. They have to connect to the network, though. If they're just by themselves, they're not really adding to the network. So we really developed solutions to allow them quickly to find out which of the people they know is already on LinkedIn, so they can be part of the main network and not have the little islands. But they're very valuable because if people are outside this naturally grown tree, the natural grown tree will continue to grow, but it grows in a certain direction and path. But if you have someone just signing up all the way over here, they could start their own network and those can grow together. Same thing with PR. We wanted to be in all the major business papers. So it wasn't about LinkedIn. What we led with is, in Miami, nobody wants to write about LinkedIn at the Miami Herald Tribune, or if you're in Chicago or Houston, all those places, we wanted to be a top story in the business section. But they weren't interested in LinkedIn. The San Jose Mercury News was interested in LinkedIn because, there's local investors and it's a tech area. But we worked to find stories of people who landed investors, who landed jobs, who landed employees, who landed deals through LinkedIn. And those were the stories that we talked about. So, and people were interested. It's like, wow, this is how it's been done before, and now this seems like much faster and more efficient. So we want to write about this, but it's about people in the community, and that was much more relatable. So that gave us, because we're concerned you might have a competitor as soon as LinkedIn is successful who starts in LA and maybe grows to the Hollywood network. Maybe another one can start in New York and grow on the financial network, and then you have kind of no network can really succeed to be the network of networks like we want it to be, because while they would have the network effects in New York among the finance community, the company in LA would have kind of, people wouldn't join anymore LinkedIn because they're interested in being among other Hollywood people, right? And the oil industry maybe in Houston. And so it was very important for us to have that regional differentiation. And so these people who signed up is not a large number overall, but they're very important for that diversity of networks to contribute and make LinkedIn stronger, because you need people from all kinds of professions.
Yeah. I'm wondering why there's no feature in LinkedIn still who actually introduced these two people.
Yeah, so it's the inviter, who invited people to LinkedIn.
No, after a while you have these two people in your first connection.
Mm-hmm.
First cycle, and then you can remember how did you connect with that person?
Oh, how did you connect? Yeah. So we get requests from that, and those are usually people who are very good, offline. Even without LinkedIn, they will be good at this. And so they would ask us for this feature to make a note, even say, I met them through so-and-so, or I met them, the date they met, or at a conference they met, or so it's not always just a person, but it could be a situation. They wanted to, and sometimes they want to take a couple notes too. It's like, do they have kids or not, or things like that. So when you have a conversation, you don't forget. And so we did build that feature, and then after a year or two, we took it out because very few people used it. It was kind of disappointing to us because we thought, this is really for the people who are really using the product well. And they didn't like that we took it out. But LinkedIn has been very rigorous because you can't keep adding features because the product gets more and more complicated. So it's kind of like at this point, whenever you want to have a new feature, you need to take one out because there's only so much people can see at the same time and explore before it becomes overwhelming.
Very interesting. Yeah. So now I know. Because
we have similar requests, right? Like people have for strength of connections, like how strong is that relationship with this person versus that person, and so forth. We have a number of these things that, sometimes we tried in different ways and it didn't succeed. Now, I'm not saying we did everything right. We might have sort of tried the wrong thing and just given up on something. Maybe we needed to tweak this field a little bit. But the important thing is to realize when you're building a network like LinkedIn, you really need to think about the typical member. And the typical member is not living in Silicon Valley. They're doing quality assurance at some machinery factory, and so it's a very different mindset, and you need to work for them because the whole network needs to reach them. So we spend a lot of energy, actually. We spend some energy to give our power users what they wanted, but we also always try to see it's like, how can we help the people who are not engaged as much, who haven't even joined, to make it more attractive to them. Now, there's a challenge because LinkedIn is for everybody. There's 1 billion members now on LinkedIn. So you're covering all professions, all industries, all levels of seniority. And so, like when you provide something, and it could be very valuable for like that audience of the 2% who want to keep track of their contacts. Same thing, like doctors are maybe 2%, but they're just 2%. So the things that doctors want, for example, they want to be able to fax people through LinkedIn. Well, nobody else is interested in faxing anymore, but doctors have a HIPAA compliance, they have special requirements. So that's the challenge for LinkedIn, is to address these specific needs that, very important to a certain group. But if that group is always just 1 or 2%, it's unlikely LinkedIn can develop that. It has to be something that, maybe 10, 20% of the members will find useful. So that's why news is become a pretty big part of LinkedIn, because that's something that has very broad appeal. And that wasn't our initial, because we felt like that's already done. There's Wall Street Journal and, other business publications, like what can we really offer? But we learned, we need to offer things that a broad set of people can use and on a regular basis. Not, like looking for an investor is not something, everybody does. And then the people who do it, probably only do it every year or two. So.
Has it opens opportunities to, many different business clubs, owners, they try to build their own networking tool. But I don't know, I met maybe 5 for the last 2 years, and I'm pretty sure you met much more than me. So, but exactly because they lack some features, is there any opportunity, do you think?
Yeah, I think if you have but it's hard because the world is so connected, of the different professions and so forth. So like you mentioned, probably one of our strongest competitors was this German company. They actually went public before us. They had pretty good revenues and they were very strong in Germany. So by the time, our network grew from here to there, by the time it got there, they were already well established. And so people were like, okay, I don't want to have profiles on Xing and on LinkedIn. So they often just stuck with Xing for a long time. But what happened is, in Germany, as you know, we have a lot of large companies that work internationally. So you have BMW over here, you have Siemens over here. And those people who work over here are in LinkedIn. And so for these large company employees, it made the most sense to be on LinkedIn because they wanted to work with their colleagues in South Africa, in Asia, in the US, and not just the German colleagues. So when the large companies in Germany, started adopting LinkedIn, the individuals, then over time, Xing started losing it because then the mid-tier that sells to the large companies wanted also to be on LinkedIn. So it took some delay. But so when you look for an opportunity to start something in this space, it's often quite difficult because it is very connected. And so even you think, okay, Germany's sizable and safe, but it's not. But there are some spaces. I was involved on the board of a company called Doximity for 6 years. That's a doctors network. It's got 80% of all US physicians in it. And so that was able to thrive quite well because doctors are not part of the business community. They don't really network. They don't get business from, people on the business side. They don't want to connect with patients either. So they kind of, but they have almost like their own special language. I don't know if you have any family who are doctors. They have their own language. They understand each other's working with patients, working with insurance, with the health systems. So they're kind of like a real separate world. And so I think that's one reason that company has been able to succeed and has had phenomenal engagement numbers. The company went public maybe 4 or 5 years ago. The engagement is very high because when you focus on a small group like that, you can make sort of it much more the information you send much more targeted, and you can also include more workflow features for the everyday jobs, in addition to sort of network and information.
Let's shift a little bit to the AI space. Nowadays, AI is disrupting every field and networking as well. And even sometimes right now, AI is network for us. Yeah, AI can now write posts, send connection requests. LinkedIn can recommend you who to connect with, or even apply for a job for you. So what do you think, where will LinkedIn move next with the AI disruption? What are the fields of networking that will be disrupted by AI?
So in terms of networking, I don't think of networking that much. I think of managing your relationships, right? It's not so much about just meeting new people, but certainly, I would say that when people can write these posts on AI with AI, it's very easy now to generate a post on LinkedIn that doesn't sound bad. What are you going to have? You're going to have a lot of posts. And some of those posts will be, interesting and relevant because you can't even tell that it was written. In fact, I had someone else who was interviewing me, gave me a little sort of outline what we wanted to talk about. And I just thought, wow, this person was very thoughtful. And later she confessed that he basically fed my profile into ChatGPT and it came up with this. So, really it stood out in terms of being better than, what I'm used to. So, you won't be able to tell necessarily what's from, right now you can sometimes just because if you know the patterns you can tell, but if it's going to get harder and harder and often, be pleasantly, surrounded. And I think actually one of the issues with AI we're going to have is that happiness will get impacted. Because we already had that especially for women, it's an issue, right? You see all the magazines and the models thin and dressed up and, and they feel like their own bodies doesn't live up to it. Well, with AI being not just so productive, but also emotionally intelligent, we may all feel we fall short of it. And we might find that humans fall short of the conversations they're having with AI, how efficient it is, how polite, and so forth. So if we start comparing ourselves, just like, females would compare themselves to a model and find it very hard. Not all humans, especially in the working world, would compare ourselves to, to AIs that are very smart and able to do things, like our dream employee, for example. Also really is going to limit opportunities for young employees because usually AI first takes the easiest jobs that need the least sort of intangible experience that you only build up after 10 or 20 years. So the entry-level jobs in marketing was like writing copy, writing posts like that, right? They would work for a PR agency. Now AI can do it. So it really reduces the opportunities. And I think the people who are getting into the tech field are most impacted because the tech companies are the first ones to adopt AI to write, I think already, a lot of large companies are writing 30-40% of their code with AI. I'm sure that it will be close to 80 or 90% soon. So all these people who are computer science degrees, there's still opportunities, but much fewer than before. So one of the things that comes down is, can you trust, because sometimes in AI, of course, there's hallucinations. And I think that will continue to be, especially as you get into more detailed things. So can you trust the person? Is that an actual person? Because if you respond to a post because you're now interested in the product of that person, but that person isn't really the one who wrote the article. So it's sort of like you fell in love with the AI, but not with the actual company. You really want to know, if I do business with that company, is this the person who writes thoughtful articles? So I think the in-person connection will actually become more important over time, because there is such a quantity and they're not poor quality of information, but people really want to know, who are you? And so meeting someone in person is still a very good way to verify and to rely, your trust, with somebody.
Yeah, I think ChatGPT knows me sometimes even better than I know myself. I even asked ChatGPT what are my blind zones, and I was shocked about the answers, because now I discuss too many things with ChatGPT, and I'm thinking if other people doing the same, so at some point he will definitely know better who should I talk with, who are my best customers, and he can connect us. And so this disruption, it's so like, is it dangerous? Is it empowering? What do you think about it?
To me, new technology is never good or bad. People often ask about, when the internet came out, because I went through all these different phases when, it's just even software. But then when the internet came out, there's a lot of discussion, like, wow, now people are spending all this time, online. What I was like, well, people have the same number of hours in the day. So what are they doing less of? They're watching less TV. So, I think that's generally probably a good thing. Doesn't mean it's good for everybody. Some people would go online and go to some forums and commit suicide as an extreme example. So that's obviously not a good thing. But it's, technology always has the opportunity. How it's used makes the difference. So, this comes from, take a hammer, right? I have a hammer. I can use it and build a house. A good use of technology, very helpful. I can use that hammer and I'm maybe not very skilled or experienced with it, or I think I can do something I don't really know how to do, and I hit my foot and I get injured and I'm sick and I can't work for because I have my leg in a cast for 2 weeks. So the hammer is the technology. So I don't think there's good or bad technology. It's always up to us how we use it, and that's, to me, is always a challenge for people to figure out, how do they use that technology in the most productive way in their life. And I don't think there's any way of stopping technology. Governments are notoriously behind even understanding the technology. Our politicians are often not very, very savvy. So, so I don't think there is, so I think we will continue to evolve. I don't know exactly how it's going to look like with AI, but it's definitely going to be a big player in the mix. And, they often say technology, when it's really broadly adopted, it stops looking like technology. It starts looking more like air. And I think that's how it'll be with, software. And software has evolved from desktop software to server software to internet software to social networks to, AI now.
What do you think about the US winning this AI race? Yes, in European countries, in Europe, they are more focused on regulations.
I think there's definitely great, entrepreneurship capability, in Europe. Just in the US, people are no different there. Same among men and women, like there's equal number. I think it's kind of distributed the right ingredients to be an entrepreneur. I do think that one of the things that has held Europe back is often, I know Germany the best, so I'm speaking a little bit more from a German perspective, is that people are often hesitant to adopt new technologies. A lot of countries in Asia are super willing, like Japan, to adopt new technologies. Even older people in Japan, have smartphones and use the latest technology. In Germany, it's often people try to find the hair in the soup, like they see the technology and then they want to look smart by saying, oh, but this is kind of wrong. But it's really a kind of a fear of technology, I think, that drives that kind of behavior. But it makes it harder for European startups to succeed if you have Europeans or Germans as your customer, because they tend to be not the first adopter. So when I look at the internet, Germany was not a fast adopter of e-commerce. They are now, using it quite much. But in the beginning, people were very concerned about their credit cards, and typing them into website and so forth. And social networks, Germany completely missed the first two waves. There was no Friendster in Germany. There was no MySpace in Germany. And even when Facebook came out, it was sort of a local copy called StudiVZ. So So I think, I don't know how much I can generalize to all the other different countries. I think some of the countries, it comes almost a blessing if you're in Lithuania or Estonia or some small countries, because you can't expect to make any kind of business with people just from a small country like that. Same in Israel, right? You can't build a large company just with the Israeli population. So they're always thinking much more internationally. They're thinking about the US market early on. Versus, I know Germans, it's the largest economy in Europe. A lot of entrepreneurs just focus first on Germany and then plan to expand. But you always want to select the customer who is most ready to adopt your product, not go by geography.
So what who would you recommend to go first to the US market and then to scale?
For a lot of them, I think it'll be true, but doesn't mean for everything, right? There may be some environmental products where Germans are more, ready to adopt it than, another customer base. But for a lot of the, software products, and that's not only consumers, businesses as well. And German businesses, they're very efficient businesses, so you'd think they'll be using software first. But they're often also saying, oh, well, they just think about it a lot rather than like, oh, let's try this out and see how it works. They want to think about the whole plan and how it integrates with the investments they have made in software, in training, and so forth. So that's often a barrier for them to adopt new technology quickly and experimenting. So, and often, actually, my very first software company, after I graduated from Stanford, was a maker of flowcharting software. And, I had a trade show at Systems in Munich, and, I was thinking like, well, I don't know if people trust, like this American. So I tried to make everything as German as possible. So, of course, I spoke German really well. So when the sort of potential customers walked by, they were often a little confused, like, are you a German company? And then I felt like, oh no, I have to tell them I'm from the US. But I learned it actually was an advantage. They trusted me more because I came from Silicon Valley. They know there've been lots of other software companies that they've bought, that came from Silicon Valley and that they're relying on. And a lot of these little German companies that they bought because they didn't have the financing, they didn't have the scale, they were good service providers, but they didn't grow to become a core of their IT strategy. So I learned that actually it's an advantage. So if you can get customers in the US and get some traction here, not only does it open up a market that's bigger and more uniform than the European market, it also helps you in your home market later. When they're ready later to adopt, you already have all the learnings and the customers and can bring that, and it brings you credibility to have succeeded in the US market.
Mm-hmm. Behind every entrepreneur, there is some mentor or community that helps to grow, to change the mindset. Who played this role in your life?
Well, it wasn't, for some people it's the parents. That wasn't the case for me. I mean, they were supportive in my youth. To
Maybe when you were building LinkedIn or before.
Give me, confidence and so forth, and not micromanage me and sort of give me autonomy. So I think that's very helpful for entrepreneurship. But, they're both high school teachers, so this whole world was very foreign to them. So I think it's just my network of contacts, and within that network you have sort of, maybe you 10 people that really feel you can share everything with and will give you really candid advice. Then there's maybe on the periphery of your network might still be people who know you well, but they feel they just want to boost you. They want to say positive things, and you need people who can do both. And so I would say, I just developed a core of people, and I wouldn't say it's always the same people either, because depending on, I was interested in software, not in hardware, because I liked the margins of software. I liked how fast it can scale up. I liked, that it was closest to sort of AI in terms of, how it's developing. And, but I was interested both consumer and business software. So some of my closest, professional contacts were more on the consumer side, some more on the business side. So depending on the area, I would rely on one more than the other. But also my personal friends, because every entrepreneurship journey is sometimes a little lonely. You do have downs or times of frustration. So people who you can talk about these things is very important. And a lot of these are, friends that I've had since college. So.
A few closing questions. Founders are always thinking and asking, what do investors actually bet on? Can you give some advice from your perspective? What worth investing?
Well, I mean, there's all kinds of investors. So I'm just going to talk about the investors that I think are good investors. And I think it's also one of the really important things is to think about, of course, when you're trying to get your company going, you want the money. And so when you get the money, a lot of times people feel like, okay, they got 2 or 3 offers, I'll go with the one that, I lose the least shares with, or who gives me more capital for the same number of shares. But I think that's not very strategic, because what people who've been entrepreneurs a couple of times will realize these investors, I mean, angels is one thing because they're usually not very involved. But once you have a Series A investor, Series B investors, those people have a board seat. And so for the next 5, 8 years, these people will be on your board, and they can be either, helpful to you by helping you think about the right things, by making the right introductions to new investors, partners, new technologies, or they can really waste your time because they come to the board meeting unprepared. Because they have to go to lots of different board meetings. It's not easy for an investor to keep track of, what was the issue with each company and what was the dynamic among the management team and what specific problems are they challenging. So you need board members that are going to be good. So one of the things I would advise is, think beyond getting the money, getting it from the right person. And it's more of a person than a fund. Sometimes people also get very focused on, oh, this is tier 1 VC, tier 2, tier 3, I want tier 1. Well, guess what? There are some people who are a good fit for you in tier 1, there's some people who are a good fit for you in tier 2, and there's some people who are a bad fit for you in tier 1. And so it's more important because you're not working with a fund. The fund's brand, the funds don't even, they exist for 10 years and then there's the next fund. And in fact, they're usually invested by, 3 or 4 years. So there's no real entity. And so what the other partners of the fund, whether they were lucky at their investments or not, doesn't really help you. So in terms of, so these are a couple of things that sometimes people don't think about because they're so focused on getting the money. In terms of getting the money, I think just keep it very simple. Reach out to someone on a trusted basis. Investors generally pay most attention if an entrepreneur they backed before sends them, information about a new startup or one of their limited partners or a peer that they worked with at Google. It's not someone they met at an event, like that will go kind of into the garbage can, just like the things that go over the website and in general. I mean, some associate sometimes is tasked with looking at it, but very few investment come from that. So it's really start with an introduction to reach them, and then very quickly explain the core, which is, what problem are you solving? Why hasn't it been solved? Why is your solution better? And then how can you build a business out of it? I mean, that's all pretty well known, but you just need to really stick to that core and not add too many sort of games and things. And the simpler you can keep your message, the better. Mm-hmm. But you need to be prepared for the questions that they might ask. So don't give a long presentation and trying to anticipate all the questions, because you never know what questions they're going to ask. So usually keep your slide deck very short and have a bunch of backup slides. So that way you have an impactful presentation, and then based on their questions, you just pull out the slides that are relevant to them. So you don't want them to take you through slides and, they just think, oh, either they already know, like, yeah, I don't have a concern with that, so then they're tuning out during that time, or they're stuck on something. They don't believe you, that something, you're making some assumption they don't agree with, and you just continue and they're not able to follow you.
If someone is building a startup far away from Silicon Valley today, what would be your final advice or motivational message to them?
Well, I would say definitely it's easier than ever to do that because everybody is connected more, the information is accessible to all. And also US investors, I mean, there's still, there's obviously investors all throughout the world, but the Silicon Valley investors are much more willing now to invest in startups overseas than before. So I think it's a really great time because I think a lot of the bottlenecks in Silicon Valley is the technical talent is often tapped out, and very expensive. So if you can start somewhere else where you have better access to that talent, that gives you actually a competitive advantage. So I think it's a great time to start a company, everywhere. It doesn't mean I believe in the decline of Silicon Valley, but I think of Silicon Valley more not something that's geography bound, but all the investors and entrepreneurs who are working on this, whether it's in Tokyo or in Berlin or in London, they're all part of Silicon Valley, because Silicon Valley is not something that's geography based, it's more of a mindset.
Yeah. Thank you very much, Konstantin. Great interview, a lot of insights. I'm pretty sure that the audience of International Founders will benefit a lot from your insights. Thank you.
Yeah. Good to see you in a room.